All right. Good evening, everybody. Good evening. Hey, this is Shawn James, your financial wealth educator on this beautiful, what is this? Wednesday night. Wednesday
Wednesday,
night
rainy
on
night.
Facebook Live. Rainy night here. Guys, I'm so excited tonight. I have two actually of getting to be great friends here. And tonight, guys, we're going to talk about how to begin your real estate investing empire. Your empire. That's what we're talking about. And not the show empire. Okay, this is the real empire here. So we're going to go ahead and talk about that. So tonight I have Heather Seay, and I'm really excited that she is on. She's actually part of our foreign exchange trading team. And so I'm really, really excited for her to be a part of this. But not only that, guys, I'm excited because she is also my professional realtor. And so what she does is she's the one that really holds me by the hand and helps me out as far as looking for investment properties. Okay, so she definitely deals with residential and commercial and multifamily. So these are the things that I particularly am interested in, and hopefully these are some things that you're interested in. And then of course I have Bob. Bob, how you say your last name again?
Bregitzer.
Bregitzer. So great. So he is a very professional and established, experienced lender. And so, guys, why I decided to bring this trifecta here today is, of course, I talk about foreign exchange trading and cryptocurrency trading to be that seed to get you started, because a lot of people inquire with me about how can I get into real estate investing, and I also coach real estate investing too, to new investors. But here, I really wanted to get people that are top notch, top of their game professionals to really share some great pertinent information for you guys. So please get your pen and papers ready. Go ahead and take some notes. We're going to definitely share a lot of great information tonight. And also we'll provide information for you to get back with Heather and Bob after the broadcast. Please like this. Please share it out. I know you have friends that are interested in real estate, and this is what you were probably waiting for and praying for. So we want to make sure everybody gets this information, okay? So Heather, if you can, please tell us your background and what you've done and all that other great stuff. And then we're going to get right into not just how to get your own home, okay? Because some of you may just say, hey, look, I'm not ready to be an investor, or I would like to be, but I really just want to know how I can get into my own home. And then, of course, then we'll talk about how you can use it as a stepping stone to maybe get into real estate investing. Or for some of you, maybe you're in that position where you're thinking about or have thought about or starting to take those steps to own your own real estate investment. So I definitely want Heather to kind of break that down, and then we'll go to Bob after that.
Awesome. Shawn, thank you so much for the opportunity to be on this call, and I'm excited to talk to all of y'all about real estate here in Atlanta. I'm a native of Atlanta. I grew up here. I graduated from Auburn University, and after graduating, I spent about 10 years doing mission work in Mexico. So I am fluent in Spanish, and I love speaking Spanish. When I came back from doing nonprofit work in Mexico with college students, I started in real estate in 2012. In 2013. In 2012, I bought, I was looking at possibly, after moving back from Mexico, I was looking at either getting a rental or getting, or buying. And it was actually cheaper for me to have a mortgage instead of a rental. So a friend and I were going to rent an apartment. And at that point, it was better to get a mortgage than it was. And so then it was to have a rental. So that was eye-opening for sure. And I'm definitely glad that I bought at that time. And since then, I've been involved in real estate, in residential, and helping a lot of new first-time home buyers, as well as buyers and sellers. And then also people who have bought multifamily homes, or multifamily investments, I'm sorry. So I currently, for example, I'm currently working with a VA client. She is, she's retired Air Force, and she is looking to purchase her first multifamily. So she's looking at purchasing either a duplex or a triplex, and she's going to live on one side of it because she's moving to Atlanta from out of state. And so she's going to live on one side of it. And then on the other side, she'll be getting rental income, which will cover a good percentage of her mortgage. And then I've had other clients that, one, for example, bought a new home, and he decided he wanted several of his friends to live with him, and he's renting out rooms. We found him a house that has a really nice in-law suite, so he's renting out the in-law suite as well as a couple other rooms in the house, which that considerably cuts down the amount he's paying for his mortgage. He had to be able to qualify for the mortgage on his own, but in terms of the monthly payment, he is able to not pay as much because he has his friends paying rent. And then I have another client who did a very similar thing last year, that we found him also a home with a nice in-law suite. He's renting out the in-law suite as well as a couple other rooms. So those are options, even if you're looking to purchase like your first home, or so that's one option. There's also options with multifamilies and a lot of different ways in terms of real estate investment. So I appreciate the opportunity to be on this call. And Bob is here with us, and he's a lender with Ameris Bank. I'm with England Volkers Real Estate. I'm sorry I didn't mention that. And then Bob is with Ameris, and he would like to share some about that as well.
Sure. All right. Thanks. Appreciate the opportunity to be on the call. I am Bob Bregitzer with Ameris Bank. I have been a residential lender in Atlanta for over 20 years. I've been doing it for quite a while. I actually owned my own brokerage for about 11 years. I've worked with a couple of different lenders and with Ameris right now. My history before being with a lender, working as a mortgage lender, I'm also a CPA by background. I don't practice that anymore. I work way too much in residential to even think about doing anything else, but I am still licensed CPA. And so I do help people structure transactions and figure out how to do it and how to make things profitable more than just providing a rate to somebody. And I've owned houses, I've owned investment properties. I did exactly what Heather was talking about. My first property was purchased. I was out of school for maybe a year, bought a house, and just about every single one of my friends lived there and paid me rent. No one lived there for free. So I did the same thing. That's how I started. And I've owned rental properties, I own my own house, and there's nothing better than owning real estate.
Awesome. Okay, so guys, thank you. Look, okay, so we're going to get in some nitty gritty stuff. That was great intros. So here's the thing. Okay, so we have a person that says, hey, look, Heather, I want to get into investing in maybe a quadplex. Okay, this is 4 apartments. Okay, and so now I come to you. What are some of the steps? What would help me as a brand new person that wants to get into this process? Tell me, what do I need to do to get prepared for that? And then Bob, we're going to go to you. What do I need to do on my end to approach someone like you so that this can run smoothly?
Yeah, that's a great question. Actually, the first thing I would do if someone was coming to me to talk about a quad was I would refer them over to Bob to talk about. Well, first we would talk about, there's a couple things we could talk about first in terms of like the area of town, like what area of town do you want to be in? What's your budget? What would you like your mortgage to be? Different things like that. If it's a quad, would you, for example, want to live in one of the quads, or would you want to rent out all 4, because that could make a difference in terms of the loan? So at that point, we could talk about all those things. And then also I would refer over to Bob just to be able to talk through numbers. So because we would know, for example, I've worked with clients who maybe were looking at something when we start looking even online, if they want their mortgage to be, or if maybe they qualify for $2,000 a month, but they only want their mortgage to be $1,200, or vice versa. They want their mortgage to be $2,000, but because of their debt to income ratio or different things that they have going on, it's different. So that's a really good thing to talk to the lender about, to figure that out on the front end, and then we can go look at different properties.
Okay, so that's kind of the pre-approval process that people talk about, getting pre-approved and getting that taken care of first, and then come back to you and say, hey, this is kind of what I can deal with. So Bob, you can elaborate on that. So me being a person, I would come to you. What would I expect when I come to you?
Sure. So when you come to me, we're going to talk about what it is you're looking to do. And so if we're looking at a quad, we're going to be qualifying you like we would if you're buying a single family house. Okay, I'll talk about some of the quad requirements, but as far as pre-qualification goes, what do you do for a living? Are you employed or are you self-employed? We try to limit the documentation we ask people for to the best of our ability. If you're employed, we're going to ask for W-2s. We're going to ask for pay stubs. We're going to ask for where the cash for the transaction is coming from. Self-employed, we're going to ask for 2 years of tax returns. Generally speaking, somebody self-employed need to be self-employed for 2 years. It's not always the case. There's exceptions. But those are the basic things we're going to have. And those are the basic things you should have before we even really sit down and talk, okay? We can do pre-qualifications very quick, and we do them very quick all the time. And then I'll tell you real quickly about if someone's interested in a quad. So there's three classifications for someone buying a house. There's someone who's an owner-occupant, there's someone buying a second home, or someone buying an investment property. And so with a quad, you're probably not going to buy it as a second home, but are you going to live in one of the units? If you can buy it owner-occupied, and it'll be cheaper from an interest rate perspective. If you're not, then it's an investment property. But either way, a quad's going to be 25% down for a conventional loan. And so we're going to want to know where's that cash coming from? It just can't come from under the mattress. And so what we like to do, and a lot of times we'll talk to people, we'll get you prepped on what to do, so that you're ready to buy from all angles, not just income, but cash, the whole gamut. We'll have you ready to go. And then when you even want to know before you're shopping, what's the payment going to be? What's the cash flow going to look like on a property? We can kind of estimate that, with Heather, figure out, if there's a property of interest, what's the rentals look like? We can run the cash flow, make sure you're making money on the transaction.
Awesome. Now, there's a lot of people that are running out and they're hearing in the marketplace. We got all these, and not any dig or anything negative, but people running out and getting all these credit restoration done to their credit. How important is credit to the lending process, and what kind of range of a score is it that we should be looking at?
So I'm trying to think of an analogy, but I couldn't think of one real quick. But credit's real important. It's everything. It drives whether you're qualified, and it drives the rate once you are qualified. So it's very important. So minimum credit scores right now. So I can only speak for Ameris here because there's a lot of differences in the marketplace. So a conventional loan, we need a 620 credit score. And with what we're talking about being investment properties, you're primarily looking at conventional loans, okay? So a 620 credit score is what we need. And so I will tell you that I have not had personally great luck with clients doing credit restoration. Better off going to a lender, getting your credit pulled. We have a very straightforward report that I can run for you that says what you need to do to bring your score up to 620, up to 700, under wherever we're trying to get to. It's super straightforward. I have had a lot of people spend a lot of money on credit restoration and promises that are going to happen. And my experience is it doesn't work very well. It's like I said, I got a nice way we do it through the credit bureau. It comes out and says, you got to pay this card down to this. You got to take this balance down. It's super simple. There's no hocus pocus. There's no promises of this is good getting off your credit report. Those things don't seem to really happen as far as I can tell.
Wow.
We can help you get there by running a real simple report for you.
Now that's awesome. Go ahead, Heather. What were you about to say?
Oh, and on that note, a lot of times with the credit repair, credit restoration, they're going to charge some amount, whether it's a one-time fee or a monthly fee or whatever. Whereas the lender, if you go through and talk to Bob about this, the lender's not going to charge for that, to look at your credit and make recommendations on, or to say what needs to be done for your credit score to get to 620 if it's conventional, or to get to whatever limit it is for VA or FHA.
Awesome. Now,
so they're not going to charge that either.
Oh, thank you, Heather. I appreciate it. And I do have a question from one of our teammates, Lisette. So she asked, will credit restoration programs hinder qualifying for a mortgage loan, or will that vary?
So the answer is it shouldn't hinder it. But what happens is a lot of times they do stuff that'll put a piece of credit in dispute. And when we have things that are in dispute, we have to wait for them to come out of dispute to do anything. Because what happens is with the credit report, you put a piece of credit into dispute. Credit report doesn't see that line item. It's like it's not there. Okay, and then this is when your credit restoration person's doing something to it, making it go away or whatever, and then it gets put back on by way of removing the dispute. And so if they fixed it and it's wonderful, it'll help out. If they didn't do anything, your scores are going to come down because nothing happened. So lenders won't move forward if you got things. We'll hinder it while it's in process.
Okay, awesome. Thank you for that clarification. Okay. So we covered. Let's lean a little bit more to the self-employed person, because I do kind of get that. Obviously, with the field that I'm in trading, a lot of us are independent or self-employed people. So you said 2 years of tax returns. What other things will kind of help a person that is, self-employed? What other things could possibly help?
So the tax returns your main source. Okay, that's our main source. Now there's 2 ways to qualify. There's probably more, but for me, for what we do, there's 2 ways to qualify a self-employed person. That's full documentation, which is tax returns, or we have a bank statement program, which is somebody that does not have tax returns, or the tax return doesn't say what you want the tax return to say. And so in that case, what we're using is receipts from your business. So there's a person I have in process right now. We're using 24 months of deposits into their bank account over that 24-month period. And yes, we have gotten 24 months of bank statements from them. And we're taking 50% of whatever gets deposited in their bank each month, averaged over 24 months, and that is their income. And so that is the way we're qualifying them. I don't know why he doesn't have he doesn't have the tax returns that maybe he writes everything off. I don't know, but we don't look at it. We're not using them to qualify.
Got you.
Anytime you're using full doc, it's cheaper, lower rate, lower everything. But we also have some methods if you don't have that. Like right now is a great time to plan if you're self-employed. The reason is tax returns are, got extended out, right? So tax returns aren't due right now. So we can look at how did 17 and 18 look right now. If we average that out, how's that look? Okay, maybe 17 wasn't good, but 18 was all right. And 19, we haven't filed yet, but 19 is going to be pretty good. We're going to go ahead and say, well, go ahead and file 19. And we'll use 18 and 19. So right now we're in this period where we can kind of plan a little bit, look through some stuff, and really help someone qualify. Where once all the tax due dates, fall into place, then we're stuck with just 18 and 19.
Awesome. Okay, I like that. I have one more question for you, Bob, and then we'll go to Heather on some couple other things. So I know dealing with other people who are looking for properties, there's that period of time when they come to the lender, they get pre-approved, they've gone through the docs, they're pre-approved, but then we kind of tell them, don't purchase anything, don't do anything to your credit for a certain amount of time. Can you elaborate on that? Because there's some people that still, well, I'm gonna go, I found out now that my score is really good, I'm gonna go get a car right before I close. So can you tell us how that affects this whole process?
Don't breathe. I do, all right? No, so, I've got a couple good cases of me telling someone just that. They go get pre-approved. They go to find the house, and then if we need to pull credit again or whatever, we look at inquiries. I had someone go buy an RV in the middle of my transaction, and I had this young couple. Man, this is their words, I couldn't help it because it was a deal. Buy 2 jet skis and a couple of trailers for those jet skis in the middle of my transaction. Guess what? They didn't get approved because of that. But because they financed them. we're looking at a set of numbers. That credit report has, this is your payment for this, it equals this, and this is your income. So we're qualifying you on that. So we don't want you to go out and buy other stuff because we got to relook at the numbers. Little stuff really generally doesn't matter, but we do, and in particular when someone's in transaction and we send their application package out to them, they got the house. There's one of those packages in big old bold says, "Do not get anything else," and it's don't buy nothing, don't do nothing. So
That's
it
nothing. No credit card.
change
Don't
the
try to
outcome.
credit card anything, right?
It can change the outcome.
Okay. Wow. Wow. Okay. Great info. Yeah. Hey, I'm learning some stuff. So Heather, okay, so we're gonna bounce back to you. Okay, so again, the same person we're getting the quad, what location, all this other stuff. Let's look at the perfect buyer for you. Okay, what would you love that perfect buyer to have discovered or prepared when they do come to you? They got the pre-approval part. They come to you. Because you're forming a partnership. It's always a partnership with your client. And I know with me, you are kind of like our sister now because you have treated us like family. So what's a good working partner with you when you are looking for properties, whether it is a primary residence or whether it is investment property?
Well, I mean, with the pre-approval obviously is great, the pre-qual pre-approval, knowing that and knowing what you want to purchase, knowing how much you want the mortgage to be, because obviously you could be pre-qualified, pre-approved for more than what you want to spend, and that's something that I'll talk to the buyer about. Is exactly that, but then also if they do know kind of what area of town they want to be in, that would be great. If they know that they want to be in North Fulton, or they want to be in Stone Mountain, or they want to be near the airport, if they know that information, that's a great thing to do. But then again, I have had clients. I had 2 clients last summer, actually, both at the same time, which was very interesting, that both saw. I showed each of them, one couple and one single lady, one single woman and one couple, both of them, I showed both of them about 50 houses each. Wow. One of them was focused just on one county. The other, my friend, this is a single woman, she didn't really have any parameters because of where she worked, and she worked from home some, and so she was okay with going like 30 minutes outside of Alpharetta. So we were looking everywhere, and we were looking at condos and townhouses and single family. So we were looking at all options, which is okay. I mean, I'm happy to go around and show you however many places you want to see. It's really fun to do, and that's definitely my job. So I'm definitely happy to do that. But if there is anything that on the front end that you definitely, for example, want a townhome because you don't want to mow the yard, or you definitely want a single family, or you definitely want to be in this area, that's always a good thing to know on the front end if you already have that information decided.
Awesome. Wow. 50. That's a lot. I love it. Okay, so Bob, back to you a little bit. Now, we talked about 25% down when we're talking about investment properties, okay? And this is about building an empire through. Let's talk about closing costs, because I know, Heather educated me about that through our process, so I started to learn about that. What does a person need to maybe have in reserve for closing costs, and how does the whole closing cost things work? Can somebody else pay for that? And yeah, if you can explain that.
That's a really great question. So, the down payment that I talked about was for quads. I think maybe I'll just take a second and talk about some other options there. 25% your down payment for quads, whether you got an investment property or it's a primary residence, or a primary residence. A single family house is only 15% down as an investor. So it's less down. So if you're starting out, you probably would like to start at the single family home realm than buying a quad, which is going to be obviously a much more expensive property with a lot more down. So just to let you know that's out there. So closing costs. Closing costs come in a number of varieties. They're all essentially the same, but based on the purchase price and your loan amount, that is going to change. And so the first part of closing costs is lenders charge fees. Some have points, some don't. So depending on what your rate is, most of the things that I do have no points to them. Now, if somebody wants to buy down a rate, great. We'll look at those options. But I generally charge no points. Like our Ameris bank has an admin fee of $1,025. Everything else is a third-party fee. Everything else is charged by somebody else. So you have appraisals. On an investment property, that's about $500. You got the attorneys. You got state fees. You got some intangible taxes, and then some other stuff. So quick and dirty is you can usually count about 2.5% of your loan amount as what closing costs will be. You can probably just take that quick calculation and think, boom, that's my closing costs. Okay. I'd be happy to run out scenarios, or your lender would be happy to run out the exacts for you on any property. But if you kind of put it in your head, put 2.5% of whatever the purchase price is, would be a good just kind of in your head quick number. So you have closing costs, which all go to somebody else, and you also have prepaid expenses. Okay, so you got to pay your first year's homeowner's insurance on your property in advance. And then if you're going to have an escrowed account, taxes and insurance held by the lender, you're going to have a few months of taxes and insurance that you're going to put into the kitty as well to make sure that everything's funded on time when the tax bill comes due and the insurance comes due the next year. So, but I think that's a good kind of rule of thumb number.
Okay, so that's kind of what I have to bring to the table for closing. Is that correct?
So that's closing costs.
Okay.
Bring to the table to closing, there's three components. There's your down payment, closing costs, prepaids, and then less whatever a seller's going to pay on your behalf. So one thing that is a lot of people don't know is in an investment property, the seller is maxed out at 2% of the purchase price. So things that they can pay 2% of the purchase price and closing costs. That's different. Primary residences is different. So 2% is the amount a seller can pay maximum for a property towards your closing costs.
Awesome.
Does that make sense at all?
Yeah, clearly.
All right, good.
Really shares. So I got a couple questions. So I'm glad. Thanks, guys. I'm glad you're saying this will probably be for both of you, but I'll start. Heather, go ahead. What you got?
Yeah, I'm sorry. Can I jump in on that? I wanted to mention something. What did I want to mention? So what Bob was saying about closing costs, like when I'm working with clients, and he knows this because we've done a ton of transactions together, so he sees the offers that come through, or the contracts that come through. What I'll try to do, Bob is great with telling me how much closing costs will be on a certain home, and then I will ask the seller. We'll ask the seller to max out whatever that amount that they can contribute on a home. We'll ask for that max, and then it's the negotiating between me as the buyer's agent and the listing agent and the seller and the buyer as to how much the seller will contribute. For example, the woman that I mentioned last summer that we saw 50 places. So she ended up buying a condo, and the condo was $350,000, and the seller paid about $9,500 in closing costs. That was close to the max, and through the negotiation, we got the seller to agree to pay for that. So all she brought to the table at closing was her down payment, which I think she was 3% conventional, if I'm not mistaken, but I could be wrong. But whatever that was, instead of her bringing the 3% of the $10,500 for the down payment plus $9,500 for the closing costs, roughly, she only had to bring the down payment because we negotiated getting the seller to pay the closing costs and the prepaids as much as we could, whatever that limit was. And then Bob, again, is great at giving me those numbers, so I know what to ask for. So I know what we can start negotiating at, if that makes sense.
Awesome. Wow, that's some great tidbit right there. Bob, you were about to add something?
No, she did great. I was about to say what I was going to say. So,
all right, so cool. Thank you so much. That was awesome.
And,
let me see. Yes, go ahead, Heather.
I'm sorry. Can I mention one other thing? And also, like in regards, just to give parameters. For example, I mentioned my client earlier that was looking to purchase the duplex as an investment property, and she's going to live on one side of it. She is, as I said before, she's retired military, so she's getting a VA loan, and VA loans are 0% down. So she doesn't have to bring any down payment. And then it's just, so the only money she would have to bring to the closing table would be whatever the closing cost prepaids, whatever Bob's numbers, or the lender, I'm sorry, whatever the lender's numbers are in that situation, because it is 0% down. And then you've also got, and then for FHA, that's 3.5% down. And then conventional, the lowest down payment is 3% down. If they're single family homes or even owner occupant homes.
Oh, wow.
Does that make sense?
Right. There are 3% down for first time home buyers.
Okay, thanks.
Yes.
Okay, good. I think that was one of the questions there. So, yeah, so this is a question for both of you, and Heather, you can start off with this. Our great teammate Leona Clark asks us, what are some pitfalls that you have witnessed with potential or actual investors?
I'll tell you what my biggest one was. I'll tell you what my biggest one was, and this is pre-crash, and that's where their problem was. There was a crash, but they did more than they wanted to buy the world at like one time. Instead of buying a property, letting that kind of season, letting their cash kind of accumulate, but they bought, and they had zero reserves when things started turning wrong. And so if there's anything it's the biggest pitfall that I have seen is you don't need to be Donald Trump in the first year of your real estate investing, right? You take it easy. You can't have a real estate empire without buying your own home first. Okay, so you start there. Take it easy. Buy a property, see how it works for you. Make sure it's cash flowing. Learn your lessons from everything you've learned there. Go buy the next one, and take your time, and don't go trying to buy the world all at one time. That's the biggest pitfall I've seen.
Wow, that's some great one. Heather, you got anything?
Let me ask, was it specifically about investment properties? Can you repeat her question, please?
Yeah, what are some pitfalls that you have witnessed with potential or actual investors?
Okay. Yeah, no, Bob's answer was awesome. I think in terms of investors, if it's an investment property and it's not owner occupant, it's all about the numbers. It's all about if the property is in terms of, does it cash flow, or the numbers meeting your goals? If that first property, second property, is that meeting your goals? It may not be. I have a client who is really picky about the interior, but it's going to be used as a rental. So the price is good, the numbers are good, like the numbers work in terms of the investment, in terms of a lot of people use that 1% rule, but different things. But yeah, that would be one thing I would say.
I'll give you one more that
Yeah, please, Bob, go ahead.
And that is pick your renters wisely.
For sure.
You ever tried to foreclose on someone in Georgia? It isn't easy, and it doesn't happen quick. So you are wise to make sure you pull credit on them. If you're better off foregoing a couple months of rent, even though you don't want to find a good person in the house, than to just pick anybody and hope they're going to pay you, because that can work out really bad too. So choose wisely. There's plenty of renters out there. Just advertise, do what you got to do, choose wisely.
Wow. Now I can go ahead and add to that. Go ahead, Heather.
Well, no, I was gonna agree with that. I'm working with 2 out-of-state owners right now that have townhomes in Sandy Springs that have renters. And we're about to get, one's about to come up for a new lease, so he'll be looking for a new renter. But yeah, just in terms of doing the background check and doing the credit check, as Bob mentioned, and just verifying all of that is super important, because otherwise, my other owner that lives out of state has had problems with his renter because we didn't necessarily know all of the background in the beginning that we could have. So yeah, I agree with that for sure.
Awesome. I'm gonna piggyback off of that because of my property management and me just being a investor myself. You know, some things that I learned by watching and learning being in the industry is, first of all, if you're going to look at maybe getting your first investment properties, I would suggest that you go local before you go out of state. That's one thing I learned is I run into a lot of people that say, hey, you know, I'm from Chicago, but I live down here, and you know, I used to be there, but I'm here, and now I want to invest in because my uncle told me about this property. And so what I think that runs into, especially if you're a new or novice investor, is that I feel like you're not going to experience what's going on with your property if it's so far away. That even works if it's 2 hours or 3 hours away from you, because of course, like Bob said, if you have a problem with a renter, it is going to be hell if you try to, you know, you hear your place is on fire, now you got to go 3 hours to check on it and everything is already done. Or somebody moved out in the middle of the night, took everything and destroyed the house, and the neighbor calls you and you got to go 3 hours, 4 hours to go ahead and see that. So I always suggest that your first couple properties should be very local to you, so you can put eyes on it, get used to it, and be able to check on your property. That's one main thing. And then, of course, you said the background check. Yeah, I think you should do that as you're hiring somebody almost for a job, you know, at least maybe a couple years on their job. Call references. I'm very big on calling a couple references from their past place that they've lived. It doesn't take long, guys. And then, you know, if you say, oh, you know, I can't get a background check, you know, it doesn't cost anything to tell that person to go down to the sheriff's department, pay $20, and they can bring their own background check with them if they truly want to, you know, live in that spot. And so I've done that before, where they brought their own background check, and I'll take a look at it, and they usually tell me the story, and I'll just decide, you know, whether we want to rent with them or not. So these are just some of the things that's kind of helped me along the way as far as trying to keep it pretty level there. Another question I got, and this is from James. Yep. Sorry, go ahead. Somebody has something.
I say good points.
Yeah. Jamie, my buddy Jamie here. We kind of answered it, but we're going to go over it again. She said, Bob, what is the lender looking for on the 24-month bank statements? What is the closing fees for the first-time home buyer, not an investor? And I think you did touch on it, but if you can maybe recap on that. What are the lender looking for on the 24-month bank statements exactly? What are they looking for? I guess for a self-employed person. And then what are the approximate closing fee percentage, I guess, for the first-time home buyer?
Right. So some quick parameters. Today's May the 27th. It's 8 p.m. Loan programs can change at any point in time. So that's what we're talking about today is March 27th. Probably not going to change, but it's 9 a.m. tomorrow. Who knows? What we're looking for on our bank statement loan is 24 months of deposits. So somebody, you know, making deposits into their business bank account. So what we're going to do is we're going to take 24 months of those, and we're going to average those out over that 2-year period, and that's going to be income. Those average deposits times 50% is the income we use. Just like someone giving us a W-2, if it was equal to that 50%, that's what we're using as the income piece. And it can work very nicely. It does not work for everybody, but it can work. There is a bigger down payment requirement when you do that, because obviously you're not giving us tax returns. Right now it's 25% down. So it's a different loan, different situation, but it does get people qualified. And then the other piece of that was they wanted
home buyer
Closing costs.
closing costs. So closing costs won't be any different for the first time home buyer than it is for anybody else. I would use that same factor in the numbers. So
2.5%.
2.5%. So it's different because closing costs are a percentage of the loan amount and the purchase price, depending on what cost we're talking about. If you're buying $100,000 house, that percentage is bigger than 2.5%. It's more like 3.5%. If you're buying at the 350 level, you're gonna be more about 2.5, maybe even 2.25. So it depends, but it won't be any different than in any of the other loan programs. So as long as the lender's not charging points, we're not buying the rate down. That's about what you'll experience.
Okay. And Heather, yeah, you talked about VA and other programs.
Yes, and so I was the person who was asked that. It's super simple to pick a purchase price and let me run some closing costs for you, and just pop it out to you, and you'll have it. You'll know exactly what all that stuff means. So
Awesome.
Yeah, that for anybody.
Awesome.
And I have a question.
Go right ahead.
Okay, I didn't know if you could see me. In that regard, in terms of closing cost, the seller's contribution to closing cost, what is that different an investment property versus a first-time home buyer? Or home buyer, owner occupant? Can the seller contribute more if it's an owner occupant?
Yeah, great question. So it depends on the loan type and down payment. So a conventional loan, anything that's 5% down, or I should say, less than 10% down is a 3% maximum contribution by the seller. So 5%, 3%, the contribution is 3% of the purchase price maximum. If you're at 10% down, the seller can actually pay 6% of the purchase price towards closing costs. And if it's actually 20% down, it's 9%, which is way more than closing costs are. If you want to build in buying down the rate, the whole thing, you can have the seller pay for it. If you got a seller that's willing to do it, you can make it happen. And then so FHA is 6% across all their different loan to values. And then VA is 4% maximum closing costs based on the purchase price.
Okay.
All the programs, everything's different. Everything's different contributions, but good question.
Okay, thank you.
I'm gonna slide this in, and it's kind of old school, but I'm gonna ask was, remember back when we had bank repossessions and people wanting to, take advantage of that as investment or even as their primary residence. Bob, tell me, how do you deal with that? And Heather, how do you deal with it? Is that still kind of hot to do that? Remember, that used to be kind of the thing, beginning 2000s, and there to get bank repos and all of that. And then, of course, yeah, let's talk about that a little bit.
Okay, so you're asking purchasing or trying to find banks that have properties that you can purchase? Is that the question?
Actually, both. I know Heather may have clients that say, hey, this is maybe something I want to look at. And so you can talk about that. And then, of course, for you, Bob, like, how do you structure maybe a deal with something like that, or finding banks that still, sell bank repossessions like that?
So that's interesting. It's the time period you're asking that is really interesting, because there's really no foreclosures at this current moment. All you gotta do is click the button on your online mortgage company and say, I don't want to make my payment for 6 months in this whole COVID thing.
Mm-hmm.
It's kind of crazy, but so I do not deal with the repo side of the business. Certainly, we take back properties, and it happens. But I don't deal with that side of the business. In order to speak to the finding repos out there to buy, I would say every bank probably handles it somewhat different, and maybe Heather has an idea of how you go try to find repos like that. I can tell you this, there are some realtors that are specific in that area, work with the different banks, and that's like their business plan and what they do. So there's definitely some folks that dabble in that specifically, but Heather may be able to handle how you just can go out and find some of those properties.
Sure. Yeah, and again, this is pre-March 12th, pre-coronavirus,
Right.
because of what Bob is saying about those issues with the loans being extended or payments being, extended in that capacity. But for example, I took a client, actually it was March, but the property had been listed months before, because we had our masks on and gloves and everything, and it was a beautiful old property that needed to be rehabbed, that was that needed probably $100,000 worth of work, but it was also probably 150,000, 175,000, maybe 200,000 under value. And Chase owns the property. It may still be on the market, but it was a foreclosure, and there aren't many of those right now. And it was on my listing service. There are other ways to find off-market properties. I take a lot of clients to see off-market properties that are looking to buy fix and flips, or buy and hold if they want to get in and do some work if it needs to be updated. One of the properties I helped the buyer with last year was built or hadn't been rehabbed probably since the late 70s. And so he went in and bought the property and has updated it and rehabbed it, and it looks beautiful. So so there's all those options as well, that we can look into if that's something that y'all are interested in. It's always good. And a few years ago, I bought a couple properties that were in foreclosure, but that was the time in 2015, 2016, when there were a lot more properties that were being foreclosed on. But now there's yeah.
Cool.
Hopefully that answers the question.
Yeah, absolutely. And just to elaborate for those who are watching, maybe you're a brand new person thinking about investing, or maybe you just have one, maybe two properties. And so back some years ago, like in the time period of the early 2000s and mid 2000s, bank foreclosures was a hot thing. And so, of course, it's always a rebound from the recession that we would go through. And of course, if you know, our economy kind of cycles every about 7-8 years, where we're having great highs, great unemployment, GDP looks great, and then it kind of cycles down. And then, of course, we kind of have some rough patches there, companies, all that stuff. And of course, we went through the whole 2008 bubble, all that other good stuff. And then people, the whole arm, the arm lending and, balloon payments, and people got duped out of that, things of that nature. So it put a lot of merchandise on the market. And so bank foreclosures were an advantage because lenders at that time were like, hey, look, we spent this money to fund this, and now we want a portion of that back. And so a lot of them were taking, almost 40 cents on the dollar. As low as 30 cents on the dollar, 30% on a home. People were getting like $500,000 home for a little over $200,000. And so that's kind of why, as an investor, you would look at certain things of that nature. And so I just kind of wanted to share that out. What was my question I had? Let's see. Seasoning. This goes to Bob. Now, you remember we kind of went this whole thing where for the fix and flip. Let's talk about that just a little bit, about owning a property. And then, of course, we went through that whole restructuring of the lending industry. And it used to be you could purchase something, fix, flip it, turn around in less than 30 days and unload the property. Of course, now they've kind of changed that. What's kind of going on in that realm there, Bob, if you can kind of explain a little bit on that?
Yeah, so we want, and I don't mean we lenders, the property has to be seasoned, and you have the correct term there, for 3 months. They don't want people to buy a house, slap some paint on it and then sell it for 40 grand higher than what they bought it for. So they want a 3-month seasoning on properties, 90 days primarily for most products, and some can be 6 months. So that's the seasoning requirements that we currently have.
Okay. Okay. Awesome.
It's not bad, honestly.
Let's see. Jamie asked again, is this a buyer's or seller's market right now, Heather?
They're saying right now it's a seller's market. So yeah, it's a seller's market right now.
Okay. Okay. Give me some indicators of that. Why would we think that with this whole COVID and everybody shutting in the house, who's trying to sell their house and who's coming out to look at them? I mean, what are some
Right.
to say it's more of a seller's?
Right, and that depends on in terms of going out to look at the properties, the listing agents, that depends on if the listing agents and the sellers are allowing the buyers and their agents to come in and look at properties and how they're setting it up. Some are just virtual tours, but they were like March, April, but as things have opened back up, many more of the homes we can go into. I went into a home yesterday with clients that the listing agent had, we had our own like gloves and masks and everything, but she had gloves, masks, and booties to go like on your shoes. She had all of that out on before we walked in the door, and they had left, and the sellers were still living there. It was not a vacant property. So the sellers had just left for our appointment and had left all the lights on. So we were actually not even touching any of the light switches. So there's all these precautions so that people can still sell their homes if they're needing to sell. And with interest rates being low right now, it's a good time for buyers to buy. And so sellers that are either looking to move in the summer because they want them to move in the summer for the kids or whatever the scenario is, or job transfers, etc. But then in terms of it being a seller's market, with inventory being low right now, there could be multiple offers. And then when the multiple offers happen, we want, as a buyer, it's helping buyers. I want to try to avoid, the buyer getting into a multiple offer situation, because if we don't know what the other buyer is offering or the other potential is offering, it gets more complicated. And so if the seller has, multiple offers to choose from, then it can bring the price up.
Awesome. Awesome. Heather, I'll just ask this and we're going to wrap it up here in a little bit. So for a seller, it used to be, what's your opinion on things of staging and prepping a home? What should a seller think about doing to sell their home? It used to be staging was a big thing too, putting all the furniture and getting it all pretty. Now it's just kind of have it clean and kind of move out. And then there's also where people are still living in the property and people come.
Right.
So can you explain a little bit of how that works?
Okay, sure. Yeah, there's a lot, and each individual situation is different. So if I'm going to meet with a seller and I go to view the property, to see the property before I give an idea of what I think the property should sell for, I can give specific examples or specific, if they're looking to declutter the home or to depersonalize, to take down some of their family photos before, because you want the new potential buyers that are coming through to be able to picture themselves living there. So in terms of like decluttering, some and depersonalizing the home, then some sellers might want to go ahead, depending on the situation, they might want to go ahead and paint the home in the agreeable gray or in beige so the whole home is uniform. Whereas other sellers might say, I'll give X amount, I'll give, $3,000, $5,000, whatever that price is, for you to paint in whatever color you want to paint, and I'll have it painted before closing. Or they may not paint and just leave that up to whichever buyers come through if they want to negotiate that in the offer. So there's all those different options to discuss with the seller and see what's the best option for them.
Awesome. Awesome. All right. Let me see. Bob, I had a question for you. It slipped my mind because she got me when she started saying the grays and the tans. I kind of lost it. Not the colors, not painting. Okay. Any more questions? Well, God, look, this has just been a great talk. I really do appreciate you taking time out, having Bob and Heather on. Guys, I really hope that you got some great information from this. And so I definitely want you to, again, if you're thinking about becoming that real estate investor, I know everybody has it on their dream boards. I want to own real estate and things of that nature. There's got to be some steps to start going toward there. And the whole reason that even myself, we talk about trading is because a lot of people don't necessarily have the money saved up. They are living paycheck to paycheck. We're in leaner times right now. And so we look at trading as a possible way to even get started. So of course, that's where I come in, where if this is something that you're thinking about, let's get you on the road to start building that seed money to go ahead and work on making sure your credit is straight and making sure that you can have your down payments in place and making sure that all these things are in order to go from there. Bob, okay, so the question I was thinking about, let's see, I know you specialize in, what do you think about, I'm trying to get it, wait a minute, what was I going to ask you? Because it was such a good question. I'm trying to think. Adjustable rate mortgages. That's what I wanted to know about. So what's your opinion on that? Of course, we were at that time, remember, it was, again, hot trending things. It was hot to go ahead and, have a score, and people could get a $300,000 home, pay $1,500 a month for the first 3 years, try to get a refi in the next 3 years, that 315 arm, that those things. So I don't hear about those any longer. What is your opinion on those? Where have they gone? And is that still a viable tool to use as a potential investor?
So once again, some of your questions are very, very interesting given our time period. So we go back to that time period. We had all those option arms, LIBOR arms, rates that change every single month, interest only, and there was a lot of them in the marketplace at one point in time. Mm-hmm. A lot of those, I should say, as far as I know, most of those are gone. That's not around anymore. Those high risk ones. What is still around is your traditional adjustable rate mortgage, whether it's 3 years, 5 years, 7 years, 10 years. They come as amortizing or they come as interest only. They're still around. The reason you don't hear about them right now is we have this inverted yield curve right now. So our 30-year fixed mortgage has a lower rate than my 3-year ARM does right now. There's no way on earth you're going to make any decision to do a 3-year ARM. So the only place where the ARM has come into play is if we're in really big jumbo money, where the fixed rate gets higher as that loan gets bigger and bigger. And sometimes there the ARM makes sense. Like I did a 10-1 ARM a couple months ago for a client, the loan was at 1.5 million and it made sense to do. But the high risk ARMs you're talking about aren't marketplace anymore. And I didn't like those back in the day when everybody was doing them. Right. I did a few of those because I could see the problems happening and came and they were a problem. That was a part of our crash. Those loans were definitely a piece of the reason our crash happened. Right. People were getting they were getting loans they couldn't afford, and that was one of them. So I'm okay with the ARM in the right place. If it's in the right, I'll give you an example. Someone's going to be in a house for 5 years. They know that for one reason or another. Well, then I think a 7-1 or 10-1 ARM can make sense. I think that makes perfectly good sense. Give them a little extra wiggle room, but at the same time, it can work out. But with our current market rates, I can do, on a conventional loan, I can do a 30-year fixed cheaper for them, and you're not even going to think about the ARM, which is why you don't really hear about it much anymore. Right now, it'll happen. The day will come. People will be doing ARMs again, but right now.
Right. Awesome. Are bridge loans still common practicing as a tool?
That's a really good question. So we do have a bridge loan. We do it. I know some other lenders that do it.
Can you define that real quick? Because I know I have people that probably haven't heard that term too much.
What a bridge loan is when somebody has a property, you own a house right now, and you're going to buy another house, but you can't access the equity in the house you currently own because you haven't sold it yet. So what the bridge loan does, bridge loan's a loan on the house you currently own. It's a loan on that house to pull out equity to put on the down payment of a house you're going to buy. Is you're going to sell the existing home, and when you do, you pay off whatever your existing loan is, plus the bridge loan goes away with the sale, and you pay those off. Okay, that's what a bridge loan is, and we have that product, and we do it. It is not the cheapest product in the world to do. I'll just be honest with you. I talked with a customer just today about it, and we decided to not do the bridge loan, but it is out there. It's a viable product for the right place. It works. You just got to really run the numbers out to know if it's the right product for you.
Awesome. Well, guys, look, I think I've sucked you of knowledge enough on this call. But awesome information. Guys in the chat, thank you so much. If you really liked this information that you get, please put something in there. Put great info, put thanks, put all that good stuff. We definitely want to give credit. And so, Heather, if you can just share with us how someone can get in contact with you. And then after that, Bob, how someone can get in contact with you. And we'll also include that in the comments also, so you guys can get back with these superstar professionals to start helping you build your investing empire.
Sure. Yeah. Thank you. I can give my cell phone here. I can put it in the comments as well. Or also, my cell phone is 770-990-9588. So you can reach me by cell, email. My email's a little long. And then also you can find me on Facebook as well. So any of those ways. My email is Heather Seay, and my last name is spelled SEAY, and then selsatlanta@gmail.com. That's easier than my company email address, honestly. So that's the best way since it's a German company. But yeah, I would love to answer any questions, talk to anyone. And usually I can start, in terms of the process for purchasing. I spoke to a client earlier today. She's about 3 months out, which is great time for her to, talk to Bob and talk to, in terms of getting the loan and figuring out if there's any, credit she needs to clean up and anything, any issues that need to be, fixed in that regard that he can look at. And then also as we go out and start looking at homes, I've had other clients that I've started working with, maybe that I really started talking to maybe 6 months or a year out. But usually in terms of the process, like if your lease is going to be up in 2 months and you think, maybe you want to look at a mortgage because it'd be cheaper than what you'd be paying if you sign another lease, then 2 months, is doable. You can close a loan, maybe in 21 days, 30 days, depending on the scenario. It would just depend on how quickly we found a home that you loved, and if that scenario worked instead of renting, or if you were going to sell or if you wanted to sell and then buy. But that's different than having to re-sign a lease. So that's just a different scenario. But yeah, so that's my information though.
Awesome. Thank you, Bob.
Oh, and the best number to reach me at is 678-478-5472. And if you can spell that right there, you get my last name right, you'll find me, man. There ain't many of those people around out there.
Fantastic. Well, thank you so much. Yeah. What else you want to add? What's some closing remarks? Go ahead. Give your closing remarks. Anything. I
would say real estate's a great place to invest. And this, even though this market's a little crazy, a little nutty, inventory is about to come back. I pulled up when we were talking about the inventory. Inventory is down 20% since COVID started, and for all the reasons we know why. And when it comes, there's going to be some properties there ready to buy. I think it's a great place to buy, great time to buy. We have rates in the low 3%, which I've been doing this for 20 years. I've never seen that. So it's just a great time to do it. And we'll run some numbers out of what 5% does and what 3% does to a rate, and the cost of owning a property over the life of that property. It's a big number. So it's a great time to do it. Be happy to help.
Wow. Thank you so much. Heather, we want to add anything?
Yeah, I agree. I would love to work with anyone or speak to anybody that has any questions. And yeah, it's a great time to buy. It's a great time to look at your options. There's lots of options in terms of real estate, obviously lots of options in terms of loans. It's a great time to purchase. And yeah, I'd love to talk to y'all. Shawn, I really appreciate the opportunity to be on the call.
Absolutely.
Yeah, appreciate it, Shawn.
Yeah, absolutely. Well, guys, thank you so much. And again, guys, please please share this out. Please go ahead and, there's people out there that want to and need this information. So please, let's make sure we get it to them. And please contact these two superstars right here. I'm telling you, they are awesome. Heather, I already saw in the comments, Jamie said she will be getting in touch with you. Definitely. So she's thinking about moving here to Atlanta. So it looks like she'll be reaching out to you. So,
Okay, thank you.
All right, with that being said, thank you so much, and I appreciate it. And I will talk to you guys really, really soon.
Great.
So,
Thank you so much.
have a great evening.
Have a good night.